Between March 5th and October 4th, the Australian dollar lost over 19% against the US dollar. For perspective, the euro lost only 13% in the same time frame, despite the effects of the ongoing conflict in Ukraine and the subsequent embargoes. Now, several factors appear to be fueling the move. The U.S. Federal Reserve began an aggressive tightening cycle that bolstered the dollar against most global currencies, but the Aussie dollar felt the additional effects of China's zero-COVID policies and their potential economic impact. The Aussie has historically been closely associated with China's economy, as they provide demand for Australia's vast commodity production. On November 1st, rumors began circling that China was establishing a committee to study a potential return to post-pandemic normalcy. Now, global markets appear to view this rumor with caution, and there was muted market reaction. Now, all this is going on as the Reserve Bank of Australia continues to raise rates to fight inflation, with the latest 25 basis point hike bringing the bank rate from 2.60 to 2.85%. Of course, this trails the Federal Reserve, which raised the Fed funds rates from 3.00 base to 3.75 on November 2nd. Now, CME Group offers three different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micros in these examples. If a trader believes that the Aussie dollar could rally from here, perhaps on a reopening of the Chinese economy, they could express that by buying the December micro Australian dollar contract at 0.6462 and target a move to the July lows of 0.6700. A stop for this trade could be placed below at 0.6300. This trade can make $238 if the target is reached and risks $162 if you're stopped out at your level. Now, if a trader believes that the Aussie could fall from here, they could express that by selling the December micro Aussie dollar contract at 0.6462 and targeting a move back to the October lows of 0.6200. A stop for this trade could be placed above at 0.6600. This trade could make $262 if your target is reached and risks $138 if you're stopped out at your level.